Hello and welcome to the Money Mindset. So in today's video we are going to be talking about how to invest in cryptocurrency in 2023. Now I know a lot of you have probably been hearing a lot of noise from YouTubers, people on Twitter, Redditors about buying crypto no matter what the price is. Now listen to me, we need to stay away from this degeneracy, so none of this. These guys will tell you things like DCA, or will try to tell you we're going to go to the moon, try to call the bottom after every dip. But the truth is that's a bunch of garbage, and it's a terrible strategy. In fact, if you had been following that advice and been dollar cost averaging all the way down from the peak, you might be feeling pretty frustrated with yourself right now. Dollar cost averaging is a strategy that involves investing a fixed amount of money at regular intervals regardless of the price. It's often recommended as a way to smooth out the ups and downs of the market and reduce risk, but in a bear market like we're in right now, it's actually a pretty poor strategy. When prices are falling, you'll end up buying more units at higher prices, which means you're essentially throwing away your hard-earned money. As you can see from this chart, every time you bought a dip in 2022, the price just keeps falling. You would have been better off putting your money in a high-interest savings account. As a matter of fact, if you started to DCA $100 per week, beginning March 2020, ending in November 2022, that's as far as I could get it in this calculator, you would honestly be in a worse position than if you were just to put it in a savings account making 2% interest. You'd be down over 20% today, so $3,000. If you started investing in March 2020, one of the best opportunities this decade. Does that sound like a good strategy? So what do we know now? Well, we know we're in a macro bear market, not just cryptocurrency, but in the broader markets as well. We're entering a recession, and the Federal Reserve is raising interest rates. Now, what does that mean? Well, the Fed raises rates, makes borrowing more expensive, slows down growth. This makes risk-on assets like tech stocks, cryptocurrencies less attractive, because investors can get a higher return on their money just by putting it in a high asset bond or high interest savings or just keeping cash. This is why cryptos and tech stocks are taking massive hits. Ask yourself this: why throw away money in a downtrend when you can be saving and investing when the downtrend is finished? That's why we say don't fight the Fed. So what do we want? We want to buy low, sell high. This means buying the bottom, selling the top. Obviously, we're not going to get the timing exact, but by following this strategy, we'll get close. I'll be here to guide you. We're going to ease into the market once it's cooled down and ease out once it heats up. Alright, let's take a look at the 2014-2015 Bitcoin bear market. As you can see, we started in a downtrend where the price made lower lows until there was a capitulation event. After this event, there is a accumulation phase where the price remained fairly stable, making higher highs over a long period of time. And the accumulation period is where we want to be buying. We're not timing this exact bottom here, but we're buying when the price is at lows, like this, so that we can sell all the way up here. We're going to sell, 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 right? Yeah, it's not all about timing exact, but we're going to get close. Now let's apply the same principle to the current bear market. as you can see, we are still in a downtrend, still making lower lows. We don't know if there has been a capitulation yet. This could have been it, but who knows? We could go on and capitulate further. No one knows, but it could have happened, but we need to wait longer to see how the market plays out. We could either have a big crash or could experience time-based capitulation. Basically, that means we're just going to slowly bleed over a long period of time, low volume. So we need to be careful. We need to wait. We need to be patient. And we need to be especially careful because of the macroeconomic conditions that I mentioned before. Crypto is very risky right now. So we could see something like we just go sideways, go up a bit, go down, long periods of time. Right now we're staying away from altcoins. I can't stress this enough. There's no need to be buying and holding altcoins during the bear market. They're way too risky. They're highly speculative. They're more volatile than Bitcoin. They perform worse than Bitcoin in the bear market. There's no need to have them. More susceptible to scams, pump and dumps, fraud. Something you definitely want to avoid. Just going to remind you, Terra Luna, FTX, Celsius, Solana, Voyager, list goes on. They're all garbage. Just stay away from them now. We'll get to buying altcoins later once the bull market returns, once Bitcoin shows strength. So instead we're just going to be patiently waiting to invest in Bitcoin only. This is a great time to be stacking cash. We want money in the bank right now. If you don't have a job, now's the time to get one. Start saving. Keep your money out of this market. Until we form the bottom, enter an accumulation phase, start making higher highs. There's no need to enter right now. We're in a recession right now. No need. Then and only then we'll deploy our capital into Bitcoin only. And once Bitcoin starts showing some strength, then we'll start considering altcoins, and I will let you know exactly when that happens. It'll be a topic for another video. So there you have it. A few tips for how to invest in cryptocurrency in 2023. Remember, it's all about buying low, selling high, being patient. By following these strategies, you'll maximize your chances of success and achieve your goals. Just don't let FOMO get to you, fear of missing out. Thanks for watching. If you enjoyed the video, please be sure to give a thumbs up and subscribe. Always do your own research and never invest more than you can afford to lose.